Look across the spectrum. There are warning signals. Sirens are flashing. But just like a test fire alarm, people are immune. They have heard this all before. The Fed said that they will extend the longest bull market in history with no consequences, and they'll do just that. And now back to reality. You came here for the truth, so let me unveil that for you. Today, we are going to look at the widespread economic slowdown. We are watching what's going on all over the world, seeing the facts add up. I told you I was going to bring you this video, and here it is. I'm going to connect the dots on so many different pieces of information. I want to bring it to you in as quick and concise manner as I possibly can, so let's get into it right away. If you watched the previous video I did, you would recognize this article. Essentially what we're looking at is a Reuters article that talks about how it looks like globally we are in a recession right now. They give you all the details in the article, but also linking to a set of charts that I wanted to show you here today. Here it is, 53 pages worth, okay? I'll just show you, I'll scroll through really quickly, page after page after page, showing you all the data that you need to know. And this information comes globally. We are not looking at one individual sector, not looking at just one market. Of course, this information is so valuable because it tells you all the pieces of the puzzle, or at least some of those pieces. Global Economy Compendium of Cyclical Indicators, John Kemp, Reuters. So I'm going to move through some of this here and I will show you what he had to say, but ultimately, if you want to know what's going on, link will be in the description and definitely read through it. Look at all the different charts. What I want to show you overall here is that we have seen this before. Cycles repeat. However, sometimes they are able to revert backwards, okay? And you could see here, they are able to correct themselves. So it doesn't necessarily fall off a cliff like it would during a recession. You have to understand that what we're doing here is not predicting the future, but we are ultimately just tracking as it goes. Let's look at some of these right now. Volume of world trade 93 to 2019, and you could see right here how this has come down just the same as we have seen it in the past. Now, of course, this occurred multiple times, but didn't necessarily end up in a recession, okay? You need to be aware of that not every time world trade falls down that a recession follows, but certainly this is one indicator. It moved into the negative as we approached into 2019. Things were looking terrible, and then that has come around somewhat. You've seen some of the statistics improving, but we'll see where it goes from here. It is said that South Korea's market is a bellwether of what to expect, and here you can see the yellow dotted line is world trade volumes, and then Korea's stock market is the white line. And of course, this just shows you that they match up very, very accurately, and we should be paying attention right now because their market is being hit hard. It is tracking the performance, as you can see, but this just shows you where it could be heading. JP Morgan Global PMI new export orders. This has moved into a contraction. That line crosses the 50 line. Whenever it moves below, we have a contraction. This is not the only one that has showed that. In general, PMIs are moving downward. If they aren't already in contraction mode, they have been moving down all over the world. You look at this type of data along with all of the different freight indexes, it is just showing you that things are slowing down. Add it all up, piece it all together, and you will see the truth. Hong Kong air freight volume from 99 to 2019, and you see the different instances at which this moved downward. However, if you look at this happens to be very significant because of the level that it has moved down into right now. We have only seen this a few times over these years, and the situation in Hong Kong right now only seems to be getting worse. So keep your eyes on this one as well. London Heathrow air freight volume 2006-2019. You could see the exact same thing here again. Port of Long Beach container throughput. This happens to be more volatile, but definitely showing us a contraction. Singapore container throughput. Again, same situation. U.S. Freight Transportation Services Index. I have covered this before. This covers road, rail, barge, pipeline, and air cargo, and that has been coming down quite significantly. And look at what occurred in the previous cycle. This is definitely a warning sign. U.S. freight truck tonnage, same situation. US intermodal rail freight. Do you see the pattern here? It seems like so many of these are the same exact situation over and over and over again, and I've barely scratched the surface on this report. Global industrial production is showing the absolute weakness here. Now it has slowed down somewhat on its decline, but this is something that we should be watching out for big time. US manufacturing production, all the way back from 1973 up until the present, there have only been a few instances where it has fallen to the level at which it's at today. So let's keep our eyes on this as well. Whether we are looking at manufacturing or the real economic indicators that are underlying all of the different details you get in the mainstream media, ultimately, you need to look at all of it. That's why I bring you so many charts on a daily basis. That's why I give you so much detail that I try to bring together in hopes that the majority of individuals out there, even if they are fully invested, they'll think to themselves that there is in fact a sense of risk. Most people, they don't believe that anything bad could ever happen, and that is very foolish. The mainstream media never tells you about what could potentially happen. They're always talking about it as if it's 10 years away, don't worry about it, but it could occur at any moment. Whether we're talking about a crash of the stock market, whether we're looking at a recession, whether we're talking about corporations laying people off, store closures, and any number of events that could occur, it doesn't seem like they ever want to talk about it. They always put it off so far into the future, so most people become complacent with their investments. Look, I'm not going to cover any more of this report here. I think that you get the point, but you should definitely look at it yourself. 53 pages of chart after chart after chart. My friends in the UK, this one is for you. The Chancellor has told the BBC that he does not expect the UK to slide into recession after data showed the economy shrank by 0.2% between April and June. The surprise decline came after Brexit stockpiles were unwound and the car industry implemented shutdowns. But don't worry, because they expect everything to turn around when we get the new numbers. Well, let me show you something here. This is a quote. "I am not expecting a recession at all. And in fact, don't take my word for it, there is not a single leading forecaster out there that is expecting a recession." How wonderful is that? Even, this is his quote here, the Independent Bank of England is not expecting a recession. That's right, because they would tell you that beforehand, right? They would actually bring it forth and say, we are going to expect a recession. Think about the Federal Reserve coming out and saying, we are now expecting a recession to occur at the end of 2019. What do you think would happen? Before the end of 2019, there would be a recession. They could never say it before it happens. This is ridiculous. But according to him, the fundamentals remain strong. That's right. Even though we've had serious problems in the UK for quite some time, the fundamentals remain strong. They need major change right now, and that would be a great thing. But unfortunately, it's been years and years of struggle, okay? This is a big problem that is happening right now in the UK. I hope they can overcome all of this, that which they've been dealing with. Here you can see the chart. UK growth falling 0.2%. Worst performance since 2012. How major European economies are performing. Look at the GDP numbers, okay? We're seeing Spain increasing by 0.5%, France 0.2%, Italy apparently is flat, Germany into the negative just barely, and the UK as well. Deflation is a major concern, and that's why they've been printing so much money, because everything is falling through the ground. This is the next phase of the cycle. Real deflation and central banks reacting by printing money. Speaking of the central banks, consumers are paying higher interest rates on their credit card balances than they have in more than a quarter century, and the Federal Reserve's rate cuts are no guarantee that they will receive much relief. Right now at 17%. That tells you something, okay? Despite the fact that the Federal Reserve is cutting rates, despite the fact that interest rates are still historically very low, we have seen these credit card companies that are gouging people that take on debt, that carry a balance. Thousands thousands of dollars a month. Look, there's nearly $1 trillion worth of pure credit card debt out there. These companies are making a killing off of it. And okay, they're a corporation, they can do whatever they want, but just remember what happens with all of this. You have more and more people that enter into bankruptcy, and then you will say, well, even though we have seen bankruptcies rising at this point, it's still very low on a percentage basis. Look at where it was back in, let's say, 2007. Same issue. It's still low on a percentage basis. What people are doing right now is they use the equity in their home to pay off their credit card, line of credits, and so on. This is what we're doing in a time in which housing prices are increasing. But what happens when they don't have that equity that they once did in their home? Well, we got a big problem and it's staring us in the face. That's all for this video. If you found it informative, hit that thumbs up button. When you hit the like button, you are supporting this channel to push it higher up in the search rankings. So I do appreciate that very much. If you want the financial education you were not taught in school, these two books have everything you need, top to bottom, A to Z. All the details are here. Check it out at the link in the description if you want the audiobook that's available at themoneygps.com. Economic indicators are piling up all over the world. I bring some together in this video. If you haven't seen it already, click on it and I will see you there.